Hi, I am Prerak, first year MBA Data Science and AI student at IIT Mandi. This is part 8 of the 20-minute series for 2 years. Today also I'll be going to read something to improve my communication skills. Today I'll be reading this financial accounting. So without wasting much time, let's begin. Execute on the fundamentals. Reed Hastings, Saint Jose. CA Reed Hastings recalls he got the idea for Netflix.com after paying a $40 lead fee on the movie Apollo 13. I was embarrassed, and it got me thinking that there's a big market out there, says Reed. While Netflix started out delivering movies and shows by mail, Reed's college coursework convinced him that internet streaming was the future. Today, Netflix video streaming services account for nearly 20% of all the internet traffic in the Americas. While some of Netflix's success is attributed to be a good business idea, much of it is a result of execution. In the early stages, Netflix invested heavily in accounting and data analytics systems. These systems track everything from detailed sales information to how long a customer watches a show. Being an entrepreneur is about patience and persistence, not the quick buck, claims Reed. Accounting and data analytics help Netflix make key decisions. For example, Netflix spent an estimated $30 million per episode of Stranger Things, which was one of the most expensive shows ever produced. Using sales data and analytics on viewing habits, Netflix predicted that the show would be a hit and generate additional sales. Netflix was right. Netflix accounting analytics also enable it to target customers with personalized content suggestions. Some estimate that this accounting driven strategy for customer retention adds an additional $1 billion in revenue each year. From running a company to accounting analytics and analysis, Reed says life could not be more fun and exciting. Just give me one sec, guys. Cool. Let's continue. Importance of accounting. Why is accounting so popular on campus? Why are there so many openings for accounting jobs? Why is accounting so important to companies? The answer is that we live in an information age in which accounting information impacts us all. We live in an information age in which accounting information impacts us all. Accounting is an information and measurement system that identifies, records, and communicates an organization's business activities. Measurement system, information and measurement system that identifies, records, and communicates an organization's business activities. Exhibit shows these accounting functions identifying, recording, communicating. Our most common contact with accounting is through credit checks, checking accounts, tax forms, and payroll. These experiences focus on record keeping or bookkeeping, which is the recording of all transactions and events. This is just one part of accounting. Accounting also include analysis and interpretation of information. Users of accounting information. Accounting is called the language of business because it communicates data that help people make better decisions. People using accounting information are divided into two groups: external users and internal users. Financial accounting focuses on the needs of external users, and managerial accounting focuses on the needs of internal users. External users of accounting information do not directly run the organization and have limited access to its accounting information. These users do not get accounting information from general public financial statement. Following is a partial list of external users and decisions they make with accounting information. Lenders loan money or other resources to an organization. Banks, savings and loans, and mortgage companies are lenders. Lenders use information to assess if an organization will repay its loans. Lenders loan money or other resources to an organization. Lenders, creditors, loan money or other resources to an organization. Banks, savings and loans, and mortgage companies are lenders. Lenders use information to assess if an organization will repay its loans. Shareholders or slash investors are the owners of a corporation shareholders. They use accounting reports to decide whether to buy, hold, or sell stock. External independent auditors examine financial statements to verify that they are prepared according to generally accepted accounting principles. External independent auditors examine financial statements to verify that they are prepared according to generally accepting accounting principles. Non-managerial and non-executive employees and labor unions use external information to bargain for better wages. Regulators have legal authority over certain activities of organization. For example, the Internal Revenue Service (IRS) requires accounting reports for computing taxes. Voters and government officials use information to evaluate government performance. Contributors to non-profits use information to evaluate the use and impact of donations. Suppliers use information to analyze a customer before extending credit. Customers use financial reports to assess the stability of potential suppliers. Internal users of accounting information directly manage the organization. Internal reports are designed for the unique needs of managerial or executive employees, such as the chief executive officer. Following is a partial list of internal users and decisions they make with accounting information. Purchase Purchasing managers need to know what, when, and how much to purchase. Human resource managers need information about employees' payroll, benefits, and performance. Production managers use information to monitor costs and ensure quality. Distribution managers need report for timely and accurate delivery of products and services. Marketing managers use reports to target customers, set prices, and monitor consumer needs. Service managers use reports to provide better service to customers. Research and development managers use information on projected costs and revenue of innovations. Opportunities in accounting. Accounting has four areas of opportunities: financial, managerial, taxation, and accounting related. Exhibit 1.2 lists selected opportunities in each area. Accounting has four areas of opportunities: financial, managerial, taxation, and accounting related. Accounting has four areas of opportunities: financial, managerial, taxation, and accounting related. Financial, managerial, taxation, and accounting related. Exhibit 1.3 shows that the majority of opportunities are in private accounting, which are employees working for businesses. Public accounting involves show accounting is four areas of opportunities: financial accounting, managerial accounting, taxation accounting, and accounting related. 1.2 shows opportunities. 1.3 shows that the majority of opportunities are in private accounting, which are employees working for businesses. Public accounting involves accounting services such as auditing, taxation, and advisory services. Opportunities also exist in government and not-for-profit agencies, including business regulation and law enforcement. Accounting specialists are highly regarded, and their professional standing is often denoted by a certificate. Certified Public accountants (CPAs) must meet education and experience requirements, pass an exam, and be ethical. Many accounting specialists hold certificates in addition to or instead of the CPA. Two of the most common are the Certificate in Management Accounting (CMA or CGMA) and Certified Internal Auditor (CIA). Employers want specialists with designations such as Certified Bookkeeper, Certified Payroll Professional (CPP), Certified Financial Planner, Certified Fraud Examiner, and Certified Forensic Accountant (CRFA). Accounting specialists are in demand. The tables here report average annual salaries for several accounting positions. Salaries vary based on location, company size, and other factors. Opportunities in accounting: financial, managerial, taxation, accounting related, financial preparation, analysis, external auditing, regulatory, consulting, planning, criminal investigation, general accounting, managerial, general accounting, cost accounting, budgeting, internal auditing, consulting, controller, treasurer, strategy, taxation, preparation, planning, regulatory investigations, consulting, enforcement, legal services, estate plans, accounting related lenders, consultants, analysts, traders, directors, underwriters, planners, appraisers, FBI investigators, market researchers, system designers, merger services, business evaluation, forensic accounting, litigation support, entrepreneurs. Accounting specialists are in demand. The tables here report average annual salaries for several accounting positions. Salaries vary based on location, company size, and other factors. Artificial intelligence in accounting. Some estimate that artificial intelligence could replace 40% of today's workforce in the next decade. Some estimate that AI could replace 40% of today's workforce in the next decade. Repetitive tasks such as entering invoice and transaction data will be done by AI and software. This trend toward more AI integration boards well for those with accounting knowledge. Accountants will be needed to help develop advanced AI systems and to analyze and graphics related by AI systems. Because employers recognize these valuable skills, accounting is consistently ranked among the top professions in terms of both future demand and for future earnings. Data analytics and data visualizations. Data analytics and data visualization are among the top skills sought by employers. Data analytics is a process of analyzing data to identify meaningful relationships and trends. Following are basic types of analytics. Descriptive analytics summarizes and describes events from the past. Diagnostic analytics reveals causes of events from the past. Predictive analytics predicts likely events for the future. Prescriptive analytics creates action plans to achieve a desired future. A rising fifth type is cognitive analytics, which involves using AI and machine learning to analyze and understand data in a way that mimics human cognition. Cognitive analytics aims to extract insights and knowledge from data. Accountants use data analytics for many different purposes. For example, financial accountants use data analytics to identify opportunities for new investments. Accountants use data analytics for many different purposes. For example, financial accountants use data analytics to identify opportunities for new investments. Managerial accountants use analytics to reduce waste and energy consumption. Tax accountants use analytics to navigate complex laws to determine in which state to build a new facility. Forensic accountants use analytics to identify patterns and trends that could reveal fraudulent activity. Analytics inside boxes throughout the text highlight data analytics and accounting. Data visualization is a graphical representation of data to help people understand their significance in accounting. Data visualization helps people make informed business decisions. Dr. Pepper Snapple Group uses data analytics and visualization to send accounting information to its sales route staff via an app in real time. Staff then make data driven decisions on what sales and promotions to offer retailers. The most popular tool for data visualization in business is a Tableau dashboard. A dashboard is a data visualization that includes charts, graphs, and other imaging organized for users to see important trends and relations. Decision Insights, CPA Evolution, the National Association of State Boards of Accountancy, and the American Institute of Certified Public Accountants undertook a joint initiative to transform the CPA licensure model to better reflect current and future demands of the accounting profession. These included highlighting new skills and competency like data analytics and visualization and reinforcing the importance of critical thinking. This text is written to ensure those guidelines are met. Need to knows have students apply key procedures and concepts. Each NTK has a video walkthrough. Identify the following user market as external or internal users. Internal users: CEO, regulator, marketing manager, executive employee. External auditor is not a external, internal, external, internal, internal, external, internal. Production manager is external, external. Yeah. Seventh is internal, non-executive employee. External bank lender, internal, external. Ethics, fundamentals of accounting. Ethics, a key concept. For information to be useful, it must be trusted. For information to be useful, it must be trusted. This demands ethics in accounting. Ethics are beliefs that separate right from wrong. They are accepted standards of good and bad behavior. Accountants face ethical choices as they prepare financial reports. These choices can affect the salaries and bonuses paid to workers. They even can affect the success of products and services. Misleading information can lead to a bad decision that harms workers and the business. There is an old saying, good ethics are good business. Exhibit 1.5 gives a three-step process for making ethical decisions. Accountants face ethical choices as they prepare financial reports. These choices can affect the salaries and bonuses paid to workers. Beliefs that separate right from wrong. They are accepted standards of good and bad behavior. Accountants face ethical choices as they prepare financial reports. Accountants face ethical choices as they prepare financial reports. These choices can affect the salaries and bonuses paid to workers. They even can affect the success of product and services. Misleading information can lead to a bad decision that harms the workers and the business. There is an old saying, good ethics are good business. Gives a three-step process for making ethical decisions. Use ethics to recognize an ethical concern. Consider all consequences. Make ethical decision. Choose best option after weighing all consequences. Fraud triangle. Ethics under attack. The fraud triangle shows three factors that push a person to commit fraud. Opportunity. A person must be able to commit fraud with a low risk of getting caught. Pressure or incentive. A pressure must person must feel pressure or have incentive to commit fraud. Rationalization or attitude. A person justifies fraud or does not see its criminal nature. The key to stopping fraud is to focus on prevention. It is less expensive and more effective to prevent fraud from happening than it is to detect it. To help prevent fraud, companies set up internal controls. Internal controls are procedures to protect assets, ensure reliable accounting, promote efficiency, and uphold company policies. Examples are good records, physical controls, and independent reviews. Auditors verify the effectiveness of internal controls. Generally accepted accounting principles. Financial accounting is governed by concepts and rules known as generally accepted accounting principle. GAAP wants information to have relevance and faithful representation. Relevant information affects decision of users. Faithful representation means information accurately reflects the business results. The Financial Accounting Standards Board (FASB) is given the task of getting GAAP from the Securities and Exchange Commission. The SEC is a US government agency that oversees proper use of GAAP by companies that sell stock and debt to the public. The Financial Accounting Standards Board is given the task of setting GAAP from the Securities and Exchange Commission. The SEC is a government agency that oversees proper use of GAAP by companies that sell stock and debt to the public. An audit examines whether financial statements are prepared using GAAP. International standards. A global economy demands comparability in accounting reports. The International Accounting Standard Board issues international financial reporting standards that identify preferred accounting practices. These standards are similar to but sometimes different from US GAAP. The FASB and IASB are working to reduce differences between US GAAP and IFRS. Conceptual framework. The FASB conceptual framework consists of the following: objectives, qualitative characteristics, elements, recognition, and measurement. Conceptual framework. The FASB conceptual framework in Exhibit 1.6 consists of the following: objectives to provide information useful for investors, creditors, and others. Qualitative characteristics to require information that has relevance and faithful representation. Objectives to provide information useful to investors, creditors, and others. Qualitative characteristics to require information that has relevant and faithful representation. Elements to define items in financial statements. Recognition and measurement to set criteria for an item to be recognized as an element and how to measure it. Principles, assumptions, and constraints. These are two types of accounting principles and assumptions. General principles are the assumptions, concepts, and guidelines for preparing financial statements. These are shown in Exhibit 1.7 along with key assumptions. Specific principles are detailed rules used in reporting business transactions and events. They are described as we encounter them. Accounting principle, there are four general principles: measurement, full disclosure, revenue recognition, expense recognition, going concern, monetary unit, time period, business entity. Principles, assumptions, and constraint. Accounting principle, there are four general principles. Measurement principle, accounting information is based on actual cost. Cost is measured. Measurement principle, cost principle, accounting information is based on actual cost. Cost is measured on a cash or equal to cash basis. This means if cash is given for a service, its cost is measured by the cash paid. If something besides cash is exchanged, such as car traded for a truck, cost is measured as the cash value of what is given up or received. Information based on cost is considered objective. Objectivity means the information is supported by independent, unbiased evidence. Later chapters cover adjustments to market and introduce fair value. Revenue recognition principle. Revenue is recognized when goods or services are provided to customers and at the amount expected to be received from the customer. Revenue is the amount received from selling products and services. The amount received is usually in cash, but it can be also be a customer's promise to pay at a future date, called credit sales. Accounting principle, there are four: principal, assumptions, and constraints. There are two types of accounting principles and assumptions. General principle are the assumptions, concepts, and guidelines for preparing financial statements. These are along with key assumptions. Specific principles are detailed rules and reporting business transaction and events. They are described as we encounter them. Accounting principles, there are four general principles. Measurement principle, accounting information is based on actual cost. Cost is measured on a cash or equal to cash basis. This means if it is a car, cash is given for a service, the cost is measured by the cash paid. If something besides cash is exchanged, cost is measured as the cash value of what is given up or received. Information based on cost is considered objective. Objectivity means that information is supported by independent, unbiased evidence. Later chapter cover adjustments to market and introduce fair value. Revenue recognition principle. Revenue is recognized when goods or services are provided to customers and the amount expected to be received from the customer. Revenue is the amount received from selling products and services. The amount received is usually in cash, but it can also be a customer's promise to pay at a future date called credit sales. To recognize means to record it. Expense recognition principle, matching principle. Expense is recognized in the same period as the revenue recognized as result of that expense. Expense is recognized in the same period as the revenue recognized as a result of the expense. Expenses recognized in the same period as the revenue recognized as a result of that expense. An example is sales salaries expense recorded at same time as the sales revenue it helped produce. Full disclosure principle, a company reports the details behind financial statements that would impact user decision. These disclosures are often in footnotes of the statements. Credit cards are used to pay $200 in gas for loan services during June and July. The cards are paid in August. When is the expense recorded? If revenue is earned over time, record $100 expense in June and $100 in July. Accounting assumptions. There are four accounting assumptions. Going concern assumption, accounting information presumes that the business will continue operating instead of being closed or sold. This means that property is reported at cost instead of liquidation value. Accounting principles, accounting assumptions, and accounting constraints. Accounting assumptions, there are four accounting assumptions. Going concern, monetary unit assumption, time period assumption, business entity assumption. Going concern assumption, accounting information presumes that the business will continue operating instead of being closed or sold. This means, for example, that property is reported at cost instead of liquidation value. Monetary unit assumption, transaction and events are expressed in monetary or money units. Example of monetary units are the US dollar and Mexican peso. Time period and assumption, the life of a company can be divided into time periods such as months and years, and useful reports can be prepared for those periods. Business entity assumption, a business is accounted for separately from other business entities and its owners. Exhibit 1.8 describes four common business entities. Accounting constraint, the cost benefit constraint or cost constraint says that information is disclosed by an entity must have benefits to the user that are greater than the cost of providing it. Information disclosed by an entity must have benefits to the user that are greater than the cost of providing it. Materiality or the ability of information to influence decision is also sometimes mentioned as a constraint. Conservatism and industry practice are sometimes listed as well. Decision ethics, number of owners, sole to the business tax, accounting constraint. Okay, cool. Decision ethics boxes are role playing exercises that stress ethics in accounting. Entrepreneur, you and a friend develop a new design for ice skates that improves speed but increases risk of injury. You and a friend develop a design for ice skates that improves speed but increases. Your plan to form a business to manufacture and sell the stakes. You and your friend want to minimize taxes, but your big concern is potential lawsuit from customer who might be injured on these skates. What form organization do you set up? You should probably form an LLC, and limited liability helps protect personal property from lawsuits directed at the business. Also, an LLC is not subject to an additional business tax. You must also examine the ethics of starting a business where injuries are expected. Okay, cool. I'm done. We'll meet you tomorrow. Till then, bye. Signing off, Prerak Sharma.